Imagine you're sitting in front of your laptop and you finally have a separate account with exactly $1,000 in it. You worked hard for this money. Maybe you cut back on eating out for a few months, picked up extra shifts, or finally sold that old equipment sitting in your closet. It's a clean, comma-separated number, and for the first time, you aren't using this money to pay off an overdue bill or buy groceries. This money is designated for your future. But then, a completely new kind of anxiety sets in. You open up an investing app and you're instantly hit with a wall of flashing red and green numbers, complex charts that look like a heart monitor, and 100 different opinions on what you should do next. One person on the internet is yelling about a new cryptocurrency that's going to the moon. Another is telling you the entire global economy is about to collapse and you should buy gold. A third person is talking about complex option trading strategies that sound like a foreign language. Suddenly, that feeling of pride turns into pure paralysis. You realize that while saving the money was a physical challenge, deciding what to do with it is a psychological battlefield. You're terrified that one wrong click could make that hard-earned $1,000 vanish into thin air. So, what do most people do? They do nothing. The money sits in cash, slowly losing purchasing power to inflation because the fear of making a mistake is greater than the motivation to grow it. But what if I told you that the secret to investing your first $1,000 has almost nothing to do with finding the perfect hidden stock and everything to do with breaking a fundamental psychological barrier? Most of the financial media wants you to believe that investing is a high-stakes game reserved for math geniuses and Wall Street insiders. They frame it as a constant race to beat the market, implying that if you aren't actively trading and tracking news headlines every hour, you're doing it wrong. This narrative is incredibly damaging because it makes everyday people feel inadequate before they even begin. It convinces you that $1,000 isn't enough to matter, so you might as well gamble it on a high-risk penny stock or just spend it on a weekend trip. Here is the real truth that completely changes the game. Your first $1,000 is not about maximizing your financial return. It is about maximizing your behavioral transformation. When you have $0 invested, you are purely a consumer in the global economy. Every time you buy a coffee, stream a movie, or pump gas into your car, money flows out of your pocket and into someone else's. You are at the bottom of the financial waterfall. But the moment you invest your first $1,000 the right way, a massive identity shift occurs. You cross the invisible line from being just a consumer to becoming an owner. Think about how radically that changes your worldview. When you walk into a store or use a piece of technology, you no longer just look at it as an expense. You realize that a tiny, microscopic fraction of that company actually works for you. When millions of people around the world buy their products, a tiny piece of that economic energy flows back into your account. Now, how do you actually execute this the right way without getting caught up in the hype? The answer is beautifully simple, though the financial industry tries its best to make it sound complicated. You don't try to find the needle in the haystack, you just buy the whole haystack. Instead of trying to guess which individual company will win the future, you put that $1,000 into a broad market index fund, or an exchange-traded fund that tracks the entire stock market. When you do this, your single $1,000 investment is instantly split across hundreds of the largest, most successful companies in the world. You are buying a piece of tech giants, healthcare innovators, retail empires, and energy providers all at once. If one company has a terrible year and goes bankrupt, it doesn't ruin you because it's balanced out by the hundreds of other companies that are growing, innovating, and generating profits. You are essentially betting on human ingenuity and the long-term growth of the global economy, which historically has been one of the safest and most reliable bets you can make. There is a fascinating psychological phenomenon that happens once you put this money to work. For the first few weeks, you're probably going to check the app every single day. You'll see the balance go up by $3 and you'll feel a little spark of excitement. The next day, the market will dip, your balance will drop by $4, and you'll feel a pit in your stomach. This is completely normal. It's the training wheels phase of investing. But after a few months, something shifts in your brain chemistry. You start to notice the power of micro-compounding. You'll receive a dividend payment. It might only be $2 or $3, but when you see that notification, it hits you like a lightning bolt. You didn't trade your time for that money.
You didn't have to wake up early, deal with a difficult boss, or commute in traffic to earn those $3. Your money went to work in the economy, and it brought back reinforcements. This creates a powerful feedback loop. Once your brain realizes that money can create more money without your physical labor, your relationship with spending changes forever. Suddenly, when you're about to buy a $100 pair of shoes you don't really need, you don't just see the cost of the shoes. You start calculating how much that $100 could turn into if it were added to your investment fund. You stop viewing money as cash to be burned and start viewing it as workers to be deployed. The real trap that ruins most beginner investors with their first $1,000 is the obsession with speed. We live in a culture dominated by instant gratification. We want the fast weight loss program, the overnight viral video, and the get-rich-quick investment strategy. When people see an index fund averaging a historic return of 7 to 10% a year, they do the math on their $1,000 and think, $80 a year? That's it? Why even bother? But this short-term thinking completely misses the mathematical reality of wealth building. Investing is not a sprint, it's a snowball effect. The first layer of snow you pack together by hand is small, heavy, and takes a lot of effort. It doesn't look impressive. But as that snowball starts to roll, each rotation picks up more snow than the last. The $80 you earn this year becomes part of the foundation that earns even more next year. More importantly, starting with that $1,000 builds the emotional discipline you will need when your portfolio is worth $10,000, $50,000, or hundreds of thousands of dollars.
It is incredibly easy to manage your emotions when your portfolio drops by 2% and you lose $20. It is an entirely different psychological challenge when your portfolio drops by 2% and you lose $2,000. If you don't practice controlling your fear and panic when the stakes are low, you will almost certainly make a catastrophic financial mistake when the stakes are high. Reaching your first $1,000 invested is like earning your driver's license for the financial world. You aren't a professional racing driver yet, and you shouldn't try to drive like one. Your only goal is to get on the road, understand the rules, and build a consistent habit. The person who sets up an automatic investment of just $50 a month into a simple, boring index fund is vastly closer to true wealth than the person who sits on the sidelines waiting for the perfect moment to invest, or the person who constantly chases the newest financial trend. The difference isn't the amount of money they started with, it's the mindset they chose to adopt. So if you have that first $1,000 ready, don't let the noise of the world scare you into standing still. Demystify the process, keep it incredibly simple, and let go of the need for instant results. The system you build today and the identity you develop as an investor are worth infinitely more than the initial cash you put into the market. Once you take that first step, you'll realize that the world of investing isn't a stressful casino designed to wipe you out. It's a tool designed to help you buy back your future time $1 single at a time.